We're going to move from looking at some of the trends that this well-read report, you can see, pointed out, to some of the challenges and opportunities and impediments, and get a little deeper into that. At my far left is Ivan Schläger. He's a partner at Skadden Arps and a CFIUS expert. Of course, you know Li-Xing Chung, who we're working very hard today, and we appreciate it. And Thilo, you know, from the presentation. So there's so much rich material in this report, but I'd like to start with the optimistic projection that you have for the growth in technology investment from China. I mean, does that then presuppose that the impediments are falling away?
It does to a certain extent, and I think we see them coming down to some extent. I think the single most important impediment was not so much mentioned in our report or in any of the slides that I showed. I think the single most important impediment is the lack of experience on the side of many Chinese companies. They've been operating almost entirely in China for the past 20 years because it was such a good place to grow your business. And it was so easy to serve global markets through exports. And so most Chinese companies, with the exception of maybe 10 or 20 pioneering, really global, truly global firms like ZTE, Huawei, Lenovo, most Chinese companies really have zero experience doing business globally, and they have to move up that learning curve, how to do business globally, how to get access to the staff that they need, how to adapt to a extremely complicated regulatory environment in the US. Basic compliance, basic business regulations. So I think this is the single most important question when you look at the trajectory going upward, whether or not Chinese companies can continue that growth story. And as I said before, I think my view is optimistic because looking at the past couple of years, the learning curve is extremely steep. Talking to Chinese companies, talking to their service providers, they really learn very quickly, and looking at the increase of private investment especially, I think it's very encouraging that we see.
Ivan, I saw you nodding. And
because I think there's been a much greater understanding of the regulatory process, and I think there's more sophistication with the Chinese buyers. And I think what you saw in some of the transactions that got in trouble in front of the CFIUS agencies was a lack of understanding of the process and viewing the regulatory process as secondary to structuring the transaction. And I think where we've been very successful in a number of tech transactions before CFIUS is, at Skadden we have an integrated approach. The CFIUS review process is really a gating issue to how you're going to structure your transaction. What type of mitigation agreement are you going to enter into that could affect governance? Will the parties, will the seller ask for a reverse breakup fee or a termination fee? What are the structural impediments to getting the deal done? And I think, as you've seen some transactions that got into trouble because they ignored the CFIUS process, there's a greater degree of sophistication. When you look at Huawei and the failed three-leaf transaction, that's because they didn't take CFIUS into account at all when they made what I would call the most expensive $3 million purchase of an IP portfolio in the history of mankind, where they didn't file with CFIUS and were involuntarily dragged in front of the CFIUS process, and a huge reputational risk.
Li-Xing, how do you see it from the ground? I mean, you've presided over a quickly growing business in the US. You talked on the earlier panel about how your strategy is to avoid acquisitions because of shareholder issues, but presumably also because of CFIUS issues. What do you see as you go around to build your business in terms of the impediments? Are they just changing, or are they receding?
I think I would like to tell the story and take everybody back to second half 2010. So I think you're probably familiar with that. At that time, Spring is going the nationwide leapfrog project. So they invite all the leaders, in telecom from all over the world to bid for that project. So ZTE is one of the contenders in that project. So, I joined ZT mid of May 2010, so I spent most of my time during that period, in Kansas. So, so quick up, we get into this, and then they have developed a very sophisticated, electro bidding process. Familiar eBay, right? So eBay, you only buy bags and shoes, auction. But they have tens of billions of dollars, equipment they're going to develop through that kind of similar eBay system. So we are very proud ZTE becomes #1 in terms of technology evaluation, commercial offer, financing offer, and also, time to market. So we were celebrating. And then the second week in October 2010, and so the Spring is going to have a board meeting to approve that deal. So I got all the signal from my friends in Spring and also in the top management. So ZT is going to get 1/3 of the business. So they have pre-meeting on Tuesday, and the formal board meeting should be on Wednesday. So, and Tuesday afternoon, around 4 o'clock, I got a phone call from Wall Street Journal, a journalist, and I know, and she asked me the question. So I heard Gary Locke made a phone call to Dan Hesse, who is the CEO of Sprint, and said, you cannot buy anything from Chinese companies. So what's your comment? So I said, I have no comments. But immediately I raised a phone call to the president of Sprint and asked the same question. And so he said, our answer is that, no decision is made yet. So, and 6 p.m. that Wall Street Journal put the article on the website, and second day was on the print. So that exactly the story, and then you know what has happened. So the issue that, for us, as ZT and most Chinese companies, here is looking for strategic market access, to the US. So what's the process for that? Because, then, of course, during that, tendering process, a lot of people pointing us to CFIUS. No, CFIUS is for acquisition. This is a trade organization. Of course, after that, I personally meet Gary Locke, and I also, met Mr. Chen Deming, his counterpartner for China. I said, in front of them, I said, hey, Mr. Secretary, so if Mr. Chen made a phone call to China Unicom, the president of China Unicom said, you cannot buy equipment from a US company, what's your reaction? Of course, we become friends with Gary Locke afterwards, and he gave me actually a lot of advice behind it, or how we're going to work through that. So I think the key things, is really, in the US, we talk about, the transparency, but on the other side, you have to look into the complexity of environment, political environment, because at that time, Obama administration have certain support needs from Congress, and certain congressman is very harsh on the other Chinese company, and they don't know anything about ZT, so we got collateral damage. So, but since then we adjust our strategy here. We know that, okay, this is an area we cannot touch, no-go zone. Okay, we will not go there. So I refocus our business here in the United States on the consumer side. We invest our resources on the handset. It's the same. Spring management, they feel like they love ZT, because we are so keen to get business. We are listen to them. We invest to support their customer needs. So that's Li Shin, go with handset. So now today, we are number 4 in terms of market share in the United States. Number 2 in the no contract space. So, and we have very healthy business and growing. So that's why I'm optimistic, and also, to your point that you need to understand the environment, and then you know how to navigate through that kind of difficulty situations, and then to benefit to your company's strategy.
And I think really the focus on what the technology is. So you've got Lenovo, who's been very successful in the US in acquiring technology. We did a joint venture between EMC and Lenovo. in the storage device area. But I think you separate out core network equipment. So we did the Sprint Softbank transaction, which was a very long and complex CFIUS review. And what is publicly known about that agreement is the US government now has a veto right on core network equipment purchases. But in other technology areas that are not touching the core, like handsets, I think the US is still open, provided you understand how to work the CFIUS process, the issues related to export control technologies, the issues related to co-location with sensitive facilities, and coming up with mitigation structures that satisfy the CFIUS agencies on national security concerns. But I wouldn't take it personally. I mean, the longest, most complex, most difficult CFIUS review actually involved a French company. Right? The Alcatel-Lucent transaction, because it was core network equipment, critical to the US telecommunications infrastructure, because of the unique work that Lucent Government Solutions does for the US government. That review was long. We negotiated the security agreement. It was a long and difficult process. And that's a European ally. So I think there are certain technologies, if you're Israeli, if you're French, if you're Chinese, if you're Japanese, which are going to be difficult to acquire. But there are other technologies that if you manage the regulatory process correctly, I think there's a path forward. We've seen A123. I mean, look at your slides. A123, several Lenovo deals, CNOOC Nexon, a resource deal, a couple of years.
Aerospace.
Oh, yeah, the Sirius aircraft trainer.
Now, in your research, though, did you find, as Ivan's saying, that essentially these are challenges that other companies face, companies from allies, and you point out in the report that China presents a problem because it's not an ally and its size. But by and large, did you see a pattern of normal behavior, normal review in the CFIUS process?
Yeah, absolutely.
For Chinese companies?
Absolutely. I think it's a normal process for any foreign company to come to the US, and especially to come to California, because the regulatory environment is a little more complex. We just set up a second office in the Bay Area, and we've experienced that ourselves. So I think that's something that every company that comes to the US has to deal with, and that every foreign company that came to China 20 years ago had to deal with. How is business done? Which people do you have to talk to? And I think, just going back to the CFIUS approach, one thing that we already got from Chinese executives, from MOFCOM, from NDRC, is they're really mirror imaging their own approach. So they're asking the US, give us a list of restricted industries. Give us a list of industries we can invest in, and give us a list of industries we cannot invest in, the Chinese approach. But I think companies have to learn that that's not the way it works in the US. A deal in aerospace can be completely okay, or it can be not okay if it involves critical technology. And I think that's a learning process that companies have to go through naturally. And I think the good news is that they're learning really quickly, and that they're adapting to these new realities.
Huge premium on doing due diligence on any target. I mean, are there government contracts? Are there export control technologies? Where's the location?
Well, but there are very legitimate national security concerns that affect all companies, including China, and there's a sensitivity to it. And you talked about these approaches demanding a negative list or whatever. There are also calls, as you point out in your report, for reciprocal rights. I mean, that we should have market access. Now, CFIUS doesn't work on that basis. It just looks at the deal. It doesn't look at the overall policy. But there's another idea that's been bandied around, that they actually sort of, like the environmental impact assessment, will have an economic impact assessment. And how would you all feel about a criteria like that for Chinese investment in technology? Because at the issue is, are you going to produce jobs in the US and innovate in the US? Could it be implemented? It's the basis of some immigration policy, so...
I think it's my very strong opinion that it would be a very bad thing for the US to do that. The US has traditionally taken the approach that we only screen for very narrow national security concerns, and it has worked perfectly fine for the last 20 years. And I think implementing an additional review is not only costly. Just imagine how much FDI is coming into the US, right. And you couldn't do that on a discriminatory basis. So you would have to have another bureaucracy to review all these deals. And I think it would be a very wrong approach to take. But I think, in addition to that, I think the US has very effective domestic laws and ways of addressing some of these issues. So we have a very good competition policy regime that can address some of the competition-related issues. We have export control laws. We have trade secret laws. And so I think if the US wanted to really screen for some of these problems, domestic regimes would be the right way to go, plus international regimes that promote some of these issues.
But before you make a comment, if I could just go to Li Sheng, because you've been conscious about avoiding deals that would go to CFIUS, but what are you hearing among your colleagues at other Chinese companies? Do they feel that CFIUS is fair? It's not exactly a transparent process. It's quite opaque, and at the same time that the US is asking China for transparency in its investment policies, we have one that really isn't because of national security concerns. But what are you hearing from your colleagues? What do your Chinese colleagues feel that CFIUS is working?
I mean, Ivan is an expert, right, on CFIUS. So to us, I think that's the most or less transparency process in the United States for that. And so, I mean, you mentioned, yeah, we can working with the expert like Ivan and your firm, but the upfront premium, it's also enormous. For public traded company like us, we are very concerned about what the result comes back. So because we don't know what will be the result come out. And another side, I fully understand the respect to that kind of national security concerns. So you mentioned French. So I talked with some senators, and he told me that when the Vodafone invests in Verizon, they have to sign a mitigation agreement. Yeah. And then the British, is the most close ally with the United States. Yeah. And I said, why you do that? I said, do you remember we had a war with British, 200 years ago? So, I mean, they have a very long memory, right? So I think, but back to your point, I think, any companies like ZT, we are looking for the commercial interest in the United States. We want to sell. We want to make money here. So we need to understand the environment, the legal framework, and then you adjust your strategy accordingly. So we are not here actually try to change the legal framework. Although during the last 2 years, I have been to DC, numerous times. I met, more than half of the people on the Congress now. I meet, the federal agencies and also policy experts. I made numerous kind of proposals and the suggestions, behind the thing. But I very optimistic about the future between the China and the US, and particularly for the Chinese companies investing here. And but the key things again, so you need to understand, the framework. As our chairman said, ZT's global success is really coming from local wisdom. So we need really to understand how things works. In the United States, in Washington, and also in the local environment. How are you going to dealing with carriers? Who is your customers? What's your go-to-market strategy? So I think those kind of things is really, should be fundamental for each companies. Because today, everything in the news, in the headlines, talk about, CFIUS block this deal, and, Huawei and VT was investigated by the Hipsing, Right. But as a matter of fact, as I said, if you look at the positive side, I said in the interview, that actually helped me to build my brand there. Because suddenly, even in the car radio, and all the neighbors talk about ZT, and who is ZT, right? So I think you always look into the positive side, and then if you have the right strategy and the right talent, and working with the people like Eva and others, so navigate your role in the US, you will be successful.
Well, we had 111 CFIUS reviews last year. You had a number of successful Chinese transactions approved by CFIUS. If you look at the A123 battery transaction, I mean, it was a situation that seemed ripe for political interference of the regulatory process, because A123 had received U.S. government subsidies, had been involved in U.S. government research. They actually had some sensitive U.S. government contracts. And in the bankruptcy process, the U.S. bidder decided to not come in with an aggressive bid, but use the U.S. political process to try to win the bidding. And we were on the sell side, and we encouraged them, come in and give us your best offer. Don't try to lobby your way through success, because we had worked with the CFIUS agencies for months addressing the national security concerns related to the sensitive contracts and technology. So even with political pressure, the CFIUS agencies came to the right conclusion and approved a Chinese transaction. One thing about the statutes, I'm old enough to have been present at the creation. I was on the Senate Commerce Committee when we wrote the original Exxon Florio law. And there was a big debate about economic and industrial-based concerns versus national security concerns. And the Reagan administration at the time was adamant that it was going to be they would veto anything that wasn't a narrowly tailored national security review. And the Australians, the Canadians have a larger economic impact test. We really don't take into account industrial-based concerns unless there's a national security hook.
In the CFIUS process?
In the CFIUS process.
Well, let me ask you, starting with you, Thilo, though, you talk about how the trend is of Chinese investment in high tech is too new to really assess empirically the impact on job creation or the potential for it. But I guess the question is, the premise is that, the optimistic premise is that Chinese investment in high tech is to, improve technology, market access, business practices, and actually innovate. I mean, what is the evidence so far that this innovation is taking place? And I think we can also go back to the Lenovo case as well with IBM. But what have you found in your research so far?
I just want to make one little point on what Ivan just said before on CFIUS, and then I'm going to turn over. I think actually every Chinese company should be very happy that CFIUS exists. I think it's, in the long term,
that's a good point.
A hugely positive thing to say that now the Chinese companies are turning towards high tech. We have an institution that you can trust that filters out the bad deals. So that more investment can come in. I think in the long term, it's a hugely positive thing, and that was also, I wasn't at the table back then, but I think that was the original intention.
Access doesn't have such kind of a mechanism.
It's true, but I think that was the initial intention for having CFIUS, having a body that we can be sure about, okay, it filters out the bad deals, and we can be confident about the rest that's coming.
Good seal of approval on your transaction. But it also, from a political perspective, it inoculates you from political pressure. If 11 agencies reviewed the national security implications of your transaction and come out and said there are no unresolved issues related to national security, it's a positive for the investment.
Well, the question, and we'll get back to innovation in a second, but the question of whether it really is apolitical or non-political is a matter of debate. And that's what I was trying to get at with you. From your perspective, does it appear to be really a technocratic process?
I don't think so. I think it's again, U.S. and China is a very complicated, relationship, right? Important relation, but very complicated. So it depends on the timing also, because everybody talking about Dubai port. It was a kind of classic example of the CFIUS, how the Congress can interfere that the CFIUS process. Right? But that happened. So I think, that's also happened, that the Spring project, if that Spring project happened, 2 years ago, let's say 2008, I think there would be no issue. And so, again, the U.S. political system, it's a kind of, it's democratic system, so everybody can voice their concerns. And then, at a certain point of time, administration may have some, deals going on with with Congress is more important, then your deal goes through CFIUS. And the Congress will have tremendous pressure on the CFIUS process and then kill your deal. Well, so I think that's, I think that's the answer you're looking for. I think that's really the process not so transparent, and then, timing is very important.
But
I would like to add on that.
Let me give you one counterexample. So when Sprint Softbank, when you had a rival bidder, you had Charlie Ergen and Dish mounting a very aggressive public relations campaign to try to influence the CFIUS agencies. And it had very little impact on the CFIUS agencies, right? U.S. company versus Japanese company with the relationship with Chinese equipment manufacturers. And I think the agencies came out with the right conclusion. So.
And actually, you talked about the biggest impediment being the lack of sophistication of the company, of Chinese companies right now. But, I mean, or one of them. But, well, I want to ask about that because the perception often is that, well, no, actually, a lot of Chinese companies are coming in. They know exactly what they're trying to get in some of these non-military companies. And, I'd like to ask you, Ivan, because I think you've got some perspectives on this too, about the level of sophistication of Chinese companies, and maybe the process is not as malevolent as it's presented publicly.
It's interesting. I mean, I think there are a couple of issues. I think, as I said before, the Chinese buyers are getting more sophisticated, and they're getting more sophisticated advice. There is a portion, people like in the House Intelligence Committee who are absolutely adamant that Chinese SOEs have this very strategic game plan working in close coordination with Chinese ministries. And what we found on the deal side is, you guys compete so fiercely against each other, and it doesn't look like an organized assault at all. It looks like, there's a lot of competition to see who's going to be the first company to get a successful deal. And by the way, from the CFIUS perspective, the most important thing in presenting your transaction is to present the business rationale. So to dispel the notion that this is driven by the Chinese ministry to acquire a sophisticated technology. Now, I will say most of the successful transactions usually involve technology that, low margin business where the U.S. company is trying to get out of a low margin, very competitive business to maintain a market position in a higher technology business. I mean, what's the rationale for IBM? Lenovo right now is, commodity servers are not a good business because of the margins.
Right, and actually...
Back to you, when you mentioned about SoftBank Spring deal. So I would like to challenge you. So if it's not SoftBank, it's China Mobile buying that case, what will be the outcome? What will be the result?
As I said before, I think there are some transactions and some technologies that are not doable. I'd like to say that we can do almost any type of CFIUS review. A Chinese company can't buy a U.S. company that's engaged in the manufacture of ITAR-controlled technology, right? You can't buy a company that does classified work. And I think, a tier 1 carrier would be, a non-starter. I don't think we're there yet. We may get there at a time, but as you said earlier, there are larger geostrategic and geopolitical issues in the U.S.-China relationship that impact that type of investment. Whereas, Deutsche Telekom, a state-owned entity, has acquired a tier 1 carrier. A Japanese company has acquired a tier 1 carrier. I don't think we're there yet with, China Mobile and a large network that has a fair number of U.S. defense customers.
Thilo, you point out in the report that, the growth of the CFIUS cases raises the question as to whether CFIUS can handle the volume. But you also talk about how even while the domestic policies work, there's still a risk of the U.S. losing Chinese investment to other regions, to Europe. Could you elaborate on that, and what are you seeing?
I think there's a couple examples for companies, and I would include Huawei and ZTE, that for these companies, two things are important for where they locate their operations. A, it's market access, and B, it's export controls. I think that's another area where the US could face potentially some disadvantages when they compete with Asian economies or European economies in attracting Chinese greenfield investment. You would naturally locate your R&D center close to where your markets are. And so a company like Huawei or ZTE that has a lot better access to some of the markets in ICT in European countries, which have all been very receptive to Huawei or ZTE equipment. So if you have the choice, you rather build your R&D center in Finland or a European economy than in the US. And export controls is a second area where I think you can tell us a little more about your own experiences. You had a bit of a troubled case in the past. But the US industry has been complaining for years that the onerous and bureaucratic export control regime is a disadvantage for them in competing with other suppliers globally. And I think if you are a Chinese company and you want to invest in North America or in an advanced economy, that's a concern for you. And I think you think twice about where you locate your R&D or production facility if you're facing these additional layers of bureaucracy and burden.
Yixing, could you address it from ZTE's point of view in terms of how you've either had to change strategy or let another part of ZTE take part of the business because you just couldn't do it in the US?
First of all, I'm responsible for North America.
North America, sorry.
For ZTE. I cannot speak for other region. But overall, I agree with you that, if I take my ZTE head off, as a US company, that definitely the export control is really put, a lot of US company in disadvantage in terms of competing with European companies. But for Chinese company, if you want to do business in the United States, compliance is really important, So go back to my fundamental things. You need to understand the legal framework, around your operating the business. Market access, investment, HR issues, export control. Those are all part of the fundamentals, and you have to be aware of that. Make sure that, this is rule of law. It's right. Very important in this country. So you have to understand and follow the laws here, including export control. So for one of the few things, on top of my list, export control is really one of the key things. For example, I make sure, any visitors from China, they will not, work here, it's for short term. Anybody intend to have a permanent position in the United States, we always apply for the working visa. And anything, we take into China, even within our own organization for the R&D and the technology, we always, have, goes through that export control process. And we, as a matter of fact, we have a full-time compliance officer in our company to work on that U.S. citizen and really working to that kind of process. We have a team to support that. So again, so it's very important, to understand the local environment and follow local environment. That is exactly what ZTE doing all over the world, 160 countries. Right, and I mean, I know that you've had some, as you refer to it, collateral damage, particularly because of the scrutiny on Huawei and the congressional investigation 3 years ago. It raises a point that, Ivan, as a lawyer, you actually said that, I think I saw a quote from you, that public relations, Chinese companies understanding public relations is sometimes more important than their legal due diligence.
How you roll out a transaction, how you introduce yourself to the U.S. marketplace is a critical component of successfully completing a transaction in the U.S. And so that's where we go back to the point of our buyers getting more sophisticated. I mean, every Chinese company, either private or SOE, that we've met with, they've understood immediately you need a government relations and public relations strategy to go hand in hand. And so I think that's been a sea change. Right.
Well, at this point, I'd like to open it up to questions, if we have any in the audience, and I think we'll have the mic passed around. I have one in the third row here. Who has the, oh, you've got it. Perfect.
Could you offer any insight as to why Alibaba is having their IPO in New York and not Hong Kong?
Why is Alibaba going to New York, not Hong Kong?
Here's why. It's kind of an embarrassment to the U.S. capital markets, but it's because they can have super voting shares.
Yep.
You know, they can list and they can keep control of the company with a share that has 10 votes instead of 1, and Hong Kong does not allow that. And this is actually, you know, in a way, it's kind of a step backwards in terms of transparency and corporate governance, but they actually stated that, and the New York Stock Exchange goes around the world marketing itself in that way.
Investors buy them buying a controlled company.
Right.
You know, News Corp's a controlled company, Sprint's a controlled company.
But one side, you know, they are not IPO in New York yet. We didn't see. Because he didn't file anything to SEC, right? He just made a press release. And even not press release, maybe a Twitter announcement. So that is part of Jack Ma's strategy. You wait and see where he's going to IPO.
But I do think if he IPOs in New York and wants to do transactions in the U.S., I think being a listed company on the New York Stock Exchange is a huge benefit on the regulatory side of the U.S.
Thank you.
Any other questions? Yes, Clay. Oh, sorry.
Would any of you elaborate on any cyber risks in the management of your future business?
It is the issue in any Chinese investment in the U.S. in the technology space is cybersecurity. And the foundation of any national security agreement you negotiate with the U.S. government, cybersecurity plan is probably the first issue that's addressed. And you know, why are French deals difficult? Because no country other than a couple of others engages in more signal intercept and more cyber attacks than French.
So I think, you know, cybersecurity is an international issue. It's an industry-wide issue, right? So it's not only U.S. has cybersecurity concerns. China also has.
Thank you, Mr. Snowden.
Yeah, everybody has a cybersecurity concern. That's a matter of fact. You know, we invest millions of dollars to protect our own IP, our own IT system, right? So I think the issue right now is that too many people focus on the problem, but nobody working on the solution, right? So that's the key. So what my proposal to the policy experts in DC and also people on the Hill is that, you know, you need to have an organization not only just like HIPSI identify the problem, but also another organization focus on the solutions. So you may have to some kind of thing, CFU set for cybersecurity. I don't know. So what we propose is, you know, actually they should learn from Chinese also. So in your report, you talk about China required technology transfer or joint ventures with local partners. Should be the same. Because more and more I talking with you know, people in DC, they said we want to benefit from your technology. We want to benefit from your cost advantage because we realize, you know, if we don't let the kind of competition come to the telecom infrastructure in the United States, we were left behind from the rest of the world. But national security and cybersecurity is really the true concern. How are you going to do that? I said, let's do a trust delivery model. So let's work in a trust. Tell me which company you're trustworthy in the United States. Okay, I'm willing to license my technology to them. I would like to join venture with them. Let the people you trust to handle all this cybersecurity. Yes. It's not only from the deploy, you know, R&D, manufacturing, and deployment, and also the whole life cycle of the equipment. We can do that. So I think that's one of the suggestions. I think we get some attention. Hopefully, you know, there is a you know, resource put in there to get this kind of process going. And then the same, you know, the China need U.S. technology, right? Yeah. So and then, you know, then you can work with trusted Chinese companies, you know, in China and solve that trust issue with the Chinese government. So I think then we can have really back to normal business.
Right. You know, it's interesting though. It is the key issue, and I've heard several people say it's putting a freeze or, you know, concern on things. Yet your statistics show that the first quarter was unbelievable for high-tech investment from China into the U.S.
I don't think it's impacting flows from China to the U.S. because the U.S. intelligence community has been aware of the issue for a long time. They've been looking at it, so I don't think that will change. Right, that will change anything on the inbound side. What the recent revelations are changing are the situation of U.S. businesses in China.
Right.
They're losing a lot of market share, and the Chinese start talking about de-Westernizing their own supply chains, and I think that will take the discussion to a new level, and maybe there's going to be a stronger interest on the side of the U.S. business community to push the U.S. government to find some of these solutions that were just mentioned, and I think that's a positive development. But on the inbound side, I don't think it's going to change the story much.
Clay? In the back?
Two quick questions. One, to address what you just raised about the role of business partners, the trust that you have with a business partner and then working with that partner, that sort of thing. What is needed on the part of the business community, both in the United States and in China, to advocate for these sorts of changes? There are individual companies that have armies of lobbyists in both places, some of them labeled, some of them not. But especially in China, it's important for ZTE to get the Chinese market opened up.
Right. And you mentioned oh, sorry, go ahead.
Yeah, I was just saying to get that opened up so that the American market and American regulators will be more welcoming of you. So the first question is, what is the role of business organizations, business trade organizations, that sort of thing? And then the second thing is ZTE has done a wonderful job on the public relations front after trouble, of course, but partnering with the Houston Rockets, doing things like that. And we've seen other success stories. I was wondering whether or not it's possible to identify what Chinese investors can do, what Chinese companies can do to improve not just their brand recognition, but the reputation of their brand as good members of the community.
And in answering the first part, if you could talk about exactly what ZTE is doing to help promote the openness in China and the IP protection that is important to you globally.
So, for example, when Asia Society and Rhodium Group, made the first report, so we actually sponsored the release effort in China, in Beijing. So we invite also, the Chinese authorities and different people going there and for that event. I think we would like to facilitate such kind of dialogue. So it's a big effort for me to come here today, but I committed to that because I think it's good. So for this kind of Asia Society and all this kind of event, it's good because we don't avoid this issue. We address the issue and we talk about it. I think that's a very good thing. So we should also involve more Chinese companies doing that, not only here, but also in China. So I think, if you're looking for that, the issues in China, and I think that's very important. But more important, I mean, the U.S. companies need also, working very close with the U.S. companies, with U.S. government, also Chinese government. For example, now we have this kind of joint strategic dialogue, but it's government to government. And more, you also have a working group for cybersecurity, involve DOD and Chinese counterpartners. But I think more companies should get involved with that. And then I think will be more productive. And then through that kind of discussion, you will see the partnership and come out. I think that's very important. So, but to your point, that kind of CFIUS actually short term has impact on the inbound investment in US. If you look at your chart, from 2011, it's a dip. Now it's coming back. Long term, I'm very positive because everybody knows that the potential of the market and the innovation and that it's here. But in short term, psychologically, you have a setback. And again, I'm very optimistic for the future.
So two comments from us, and those recommendations are also in the report. I think first, as a whole, Chinese companies have not been doing a very good job in communicating why they're coming to America and what they contribute to the local economies they're in. I think they can do a lot better than in the past, through different channels, and I think it's starting. One of the low-hanging fruits that I think are out there is there's no privately run business organization that's operating on a national level. The equivalent of a U.S.-China Business Council, the equivalent of a U.S. Chamber of Commerce in China. There's a couple of state-run organizations, and then there's China Daily and MOFCOM. Those are advocating on the behalf of Chinese companies in the U.S., but it doesn't fly very well with a U.S. audience. So we need a private organization that's advocating on behalf of Chinese companies, and that's communicating.
This isn't a perfect parallel, but remember when Exxon Florio was drafted, the real focus was on Japanese investment in the U.S. and U.S. technology, and particularly in the semiconductor business. Fairchild was a deal that created a lot of attention. But I think what the Japanese did over the last 20 years is a good model. A lot of greenfield investment, and then really selling their investment in the U.S. as a key factor in economic growth. And I mean, there are Japanese plants dotted all over the South, for example, and all over California, where those name brands are like almost considered U.S. name brands. And I think that's the model.
We're at a very early stage of this, as the report points out.
Regarding your second question, it's actually, thank you for the recognition. And actually, we, again, it's from our philosophy that global success comes from local wisdom. So we need to understand how we talk with who are the audience and what is the way they understand. So we cannot talk with Americans in the Chinese way, right? So we have to communicate in an American way. But fundamental, of course, is fundamental. Our company's philosophy is here. So from very beginning, ZT is a company that has emphasized corporate social responsibility. Forbes ranked ZT as number 3 as a social responsibility among all the Chinese companies. So what we do here, we encourage our employees and also company part of that, give back to local community where we have business, where we work, where we live. So we do a lot of things, whenever we have business, together with our partners and also, with local communities. For example, Houston Rockets, we actually not sponsor, them. We did a lot of charity work with them. For example, last holiday season, we have Dwight Howard take the kids out for the dinner and to the movie, and we have a shopping spree, with Jeremy Lin, and go to the bowling with James Harden. So we do all these things, as a part of the local community. Another thing, if you go to DC, you only talk about politics. But if you go to the local level, to the state and the city and the county level, they talk about business. So you need to have goes to your constituents and then to build a relationship with your local where you have a business. And then you will see that, it will pay off, eventually. And again, you fundamental, you have been transparent as a company. And, for example, I go to DC a lot. So I connect ZT name with my face. So I talk with senators, people in the Congress. So sir, do you have any question about us? So, okay, that's your question. I answer. I cooperate from confrontation. So I try my best to answer their questions. If I don't have answer, I try my best to get answer for them. So if they have the issues, they will come to me. I think that's very important in this society.
I'd like to take one last question so we can hit the bar right here in the second row.
Thanks. My name is Audrey. I used to cover the China practice when I worked in Toronto. So my question would be, a lot of the Chinese companies, they're from a manufacturing background, which is more traditional. And when we value the companies, we look at metrics that are more retrospective, looking at the histories of the operations. And technology is a little bit different from that. Some of the companies, they don't even have revenue or net income. So what are some of the metrics that you look at that the Chinese companies should look at when they approach measuring the risks and measuring the returns for their investment for technologies?
Who wants to take that?
Should have done my CFA. I really can't answer that question. Just one observation that looking at the data, I think the most important thing that Chinese companies are looking at is long-term strategic value. And so it's hard to really measure it and put out financial metrics for it. If you look at some of the more successful stories like Lenovo, it was all assets that you couldn't really quantify. And so it depends on the industry, it depends on the company itself, but it's really hard to generalize.
It's a little bit similar to ZTE, where they operate here. They have a plant here and they hire people to work here. But some of the private companies, that I think what types of investment they do, strategic investment or just controlling interest or just 5%, 10%, they probably don't have a plant here. And so that may have a different perspective in consideration.
But I'll give you an example of a transaction I think is a good model for what you're, we did a deal in the printed circuit board space with a Hong Kong-based investor who took a 45% interest in a US publicly listed company. And the rationale for the deal was simple. The company wanted to shift commodity circuit board production to Asia, and this investor had facilities in Asia to do those commodity boards, while they focused on high-end, kind of bespoke circuit boards for the defense industry. And we created a special structure around that particular business. But that was kind of the perfect marriage, right? Where the US side has a sophisticated high-end technology and you leverage Asia and the Asian cost advantage. And I think that's a good model for how the technology investment should work.
Right. At this point, I'd like to thank our panel for a very interesting discussion.